This podcast is sponsored by AXA Farm Insurance. AXA offers tailored cover to fit your unique needs, whether it's public liability or protection for your family home, outbuildings or farm vehicles. Based in Athlone, the AXA Farm team of agri-specialists and regional managers work together to ensure you receive the seamless support you need. Switching to AXA is easy thanks to an innovative online service that enables you to quickly and easily find the best cover for your needs. For more information, head to axa.ie. AXA Insurance Stack is regulated by the Central Bank of Ireland. Thanks for listening, and we hope you enjoy the show.
Hello and welcome to AgriFocus, the podcast from Agriland that takes a closer look at the issues that matter most to farmers and rural communities. I'm Francess McDonnell, and in this episode I'm going to be talking to Tom Booijink, a senior dairy specialist covering Europe and Africa with Rabo Research Food and Agribusiness. We're going to be talking about milk prices, where they are and where they're likely to go as we get ready to close the gate on 2025. According to Teagasc, it's been overall a good year for dairy farmers. Teagasc has estimated that 2025 on average will likely be the second most profitable year on Irish dairy farms after 2022. But at the same time, there has been without a doubt a bumpy end to 2025, and not just for Irish dairy farmers. We've seen consecutive price cuts announcements here in Ireland by co-ops and processors, but there's also been significant price drops in producer prices in many European countries. So Tom, what is the outlook for Irish prices?
I get this question a lot, and normally when I speak to German or to Dutch farmers, then I always start with the question: do you know the English expression "Don't shoot the messenger"? Because that's there's much downside to the outlook. To be honest, if we have a look at the current supply of dairy all over the globe, every single dairy exporting country has surpluses that are bigger than recorded in the last couple of years, and as long as this continues, there's not much upward pressure to milk prices. So the outlook for the next couple of months is rather bleak for these for the milk prices, not specifically for Irish milk prices, but in general also for continental European milk prices, but also for American milk prices.
We've seen a sharp drop in the price now paid in the last couple of months. Why has that happened?
So two things. One is specifically for the Irish situation. I think the Irish cooperatives have chosen to have a more smoother decline in milk prices than European counterparts. But the general picture of this is what I already mentioned. The demand of the supply of milk products is just so enormous over the last couple of months that it has to have a negative effect on milk prices, and especially if you see that it's from a quantity and a quality perspective. The quantity is milk flushes everywhere. Also from a quality perspective, fat and protein levels are surpass last year levels by percentage points. So from both sides. From a quantitative and a qualitative perspective, there's extra milk coming to the market, and most of the time, I've been in dairy for 15 years. Most of the time, if pricing is influenced, is influenced because of supply and because of supply pressures, and demand is most of the time is not the real reason why sudden shocks like we see them now are happening. This has 99% to do with the excess supply that we see all over the globe.
We have seen GDT prices drop quite dramatically too in the last I think it's probably the sixth consecutive drop now that we've seen this month. Does that reflect where the pressures are?
Yeah, does it reflect where the pressures are? it's of course a trading platform, right? So this is where supply meets demand. If you were a procurement manager of a company that needs dairy commodities or dairy products, and you see the supply numbers coming in from Argentina, from the US, from the EU. And you also see that in the first weeks of November, you see that the numbers from Germany are also again +8%. From France are again +5%. So what do? You take a wait and see approach. So you wait for these prices to come down further in order to secure a better deal. Yes, it reflects the current demand and supply situation, and of course it's the attitude of procurement managers exacerbates the price development.
So the latest Global Dairy Outlook report from Rabobank Research highlighted different trends in different areas, from the US through to China, through to New Zealand. Do you think that those trends that have been identified, and we're looking at kind of consumer demand and inflation and that type of element into the whole mix, is that set to continue into 2026?
So for China, we identified a trend that the demand from China is really sluggish, and that's and if you see the economic data from China, that is something that we expect to continue. So the dairy supply in China has at best been stable over the last couple of years, but the domestic demand is declining. So you see that there's more of an export surplus, and Chinese parties are looking for export opportunities. So they're changing position more or less from a big net importer to a smaller net importer, or maybe even a net exporter. So that has an influence on the world market. Moving to New Zealand, my milking season has come as a good start. Milk price are for the news from Terra is still keeping this 10 New Zealand dollar per kilogram of milk solids milk price for the time being. So milk prices are good, feed prices are low. So there's every incentive to continue the supply growth. Add to that first half of next year, a lot of the Fonterra cooperative members will get a huge cash injection, enabling either retirement or further investments on the farms, and maybe leading to further conversion. So looking at those factors, it doesn't necessarily reflect that we think that supply will come down in a coming season. And from the US, we see that there's a lot of more, also because of the income over feed ratio that has been quite advantageous for farmers. So good farm economics. You see that the milk prices have come down considerably. So at a certain point in time that will rebalance. But you see that farmers are keeping their cows on for longer. You see that the number of dairy cows in production has even increased by 3%, which is to a stark contrast to what we see in Europe. For instance, in Germany started out the year with 3% fewer cows than last year, and still they achieve over the last couple of weeks they achieve a 7% extra milk supply. So that's can you imagine what you can do with 3% extra cows if you pull the right levers? At a certain point in time, the farm economics, the very reason that instigated this supply surplus, will turn against this supply surplus again, as it always happens in economics. But we don't expect that to happen in the first quarter of next year. So that will be further on in 2026.
I suppose when dairy farmers talk to us about what's happening in global markets and sort of commodities, they always want to know how's that going to impact on them. That's always going to be their kind of final question. And is there a concern that the cost of production is going to not equal what they're receiving for their milk checks? Are we looking at that trend now developing as we come to the close of the year?
Of course, I work for a bank. We see that most farmers have quite some meat on the bone because of the past the milk prices and the good income over feed. With declining milk prices, at a certain point in time, of course, you get to a point where production costs exceed or do not make up for the milk price does not make up for the production costs. However, at this point in time, so we do expect the milk prices to come down a bit further, especially in Europe, because the European cooperatives are a bit lagging behind in lowering their milk prices versus the Irish co-ops. Yeah, that may become an issue later on in the year and in Q1. However, yeah, we don't see immediate issues coming up.
Do you think in an Irish context there are any particular challenges that dairy farmers face now?
Yeah, the derogation theme is of course one of the key concerns I can imagine. We had of course a similar situation here in the Netherlands a couple of years back, and next year the last part of the derogation will be lifted in the Netherlands as well. The effect that it had on Dutch farmers is that average Dutch farmers, so that's a farmer who has a lot of land, but also some farmers who don't have any farmland available to spread their manure, or their herd's manure, of course, is that on average the price of getting rid of the manure, of selling the manure, is approximately 2 cents per liter of milk. So that has a cost price increasing effect. That is, especially when you combine it with the prices that are coming down, puts additional strain on the financial on the cash flows of farmers. So I can imagine that the Irish farmers are worried about that. Yeah.
And do you think, sort of looking ahead, because we've had various different kind of analysis of where the markets might be going generally in the next 12 months, when we look sort of more of a long-term view of it, do you think that the prospects are still buoyant? Because we've had a very good year on prices, and now we're tailing off, we're seeing the challenges. Do you think in an Irish context there are still opportunities?
In Ireland, you have this unique system of grass-fed dairy.
Grass-fed dairy, yeah.
And that's a unique selling point all over the globe. The fact that the Americans are willing to pay a good price premium for your butter is something that is the envy of the rest of Europe. So despite the import tariffs that have come into place, it seems that they're still buying it. So the grass-fed system in general, the cost price of producing dairy in Ireland is somewhat lower than in some parts of Europe. Combined with the fact that Irish dairy has a very good name all over the globe, so has a unique export position. There's no reason to be pessimistic about the general future of Irish dairy. I do see, however, of course, just like anyone else does, that if the prices are coming down further, and that's what we expect, that will put additional strain on farmers' finances. But if prices come down, they also come up again. And normally, I'm invited to these kinds of podcasts and shows when the prices come down. If they're coming up, then
people
then
are happy.
No one's complaining.
Nobody's complaining.
Yeah. So people are happy, and there's no need to investigate further. So another thing that I would like to mention on that is actually two things. From a consumer perspective, there seems to be some kind of reappreciation of dairy products, especially on the dairy protein side. You published, I think, earlier this week that Agriland is investing heavily in their whey processing capacity, and that's for good reason, because the demand for especially whey, the higher value whey protein isolates and whey protein concentrates is almost insatiable. I think there's a trend to value at least some of the ingredients of dairy better. And if you would have spoken to me like 5 years ago, then I think the general feeling about the dairy demand was a bit more bearish. Because there were a lot of dairy alternatives popping up in the supermarkets. Well, we've seen where that's going. So that has a place in the supermarket, but the big growth there is also leveling off. So there's some kind of also the demand for instance, cheese continues to grow also in developed markets. People just like the taste of it. They like the benefits of it. So there's maybe I'm preaching to the converted here, but this is there's plenty of opportunity in dairy. That's one. The second thing is you see especially on EU level, you see a gradual shift in the attitude of policymakers towards the dairy sector. First, the European Green Deal, of course, was ticked off, but now you see that there is room to wiggle, and where there's room to wiggle, these days politicians, if there's room to wiggle, then they take more the farmer-friendly side of options, and then it's still in its early stages, but I see a bit of a shift there.
One of a big key issue for us in Ireland has been discussions around generational renewal and ensuring that young farmers come into the sector. And, that has also sparked some debate about milk pool potential and where we are in that. Do you see that as an issue that we have to ensure that we're keeping a pipeline of young farmers to keep our dairy sector as vibrant as it is?
If you look at the data, the issue of aging in Ireland is not worse than elsewhere in Europe. The generational renewing is of course incredibly important. Younger generations are more susceptible to innovation, are more willing to try new things, and also more willing to invest just because of the horizon of their payback period is longer. Plus, it's a tough job, right? Being a farmer, so it requires a lot of physical strength from a person. So I'm glad that some initiatives are being taken on that. But also to put it into perspective, the aging farmer base has been a topic for the last 20 years. It more or less sorts itself out, right? So you see that the number of farms is decreasing, but the average herd size is increasing. So you also need less people who own a farm. So especially with all the regulations coming towards the farmers, this is you need some capacity to invest, and you need some people who are willing and energetic to tackle those. So it's an important topic. It has been around for quite some time. In Ireland, it's not worse than anywhere else in Europe. Yeah, that's basically the context that to put to it.
And finally, Tom, you've been watching the sector for 15 years, as you were saying. Are you more optimistic or less optimistic going into another new year than what you have been previously?
We'll start next year with low milk prices, and that concerns me. On the other side, I see the upward potential. I see that the world population is still growing. I see that demand for dairy products is growing in Europe and in the US. On the longer term, if you ask me what will happen in 2026, are you more optimistic? Will it be a better year for farmers than 2025? I'm doubtful, and I think if you start the year with milk prices that start with a 3, then you're less optimistic than when you start the like in 2025, you start the year with a milk price that starts with a 5, right? So so from a financial perspective, yes, it's going to be a more challenging year. However, if prices come down, it also means that recovery is starting. So in the end, the demand for dairy remains good. There's quite some challenge for European dairy, of course, because our cost price to production is higher than in New Zealand, in the US, or in Argentina, or in China for that matter. Our milk prices are higher also, but so that's a challenge, and that remains a challenge. But in general, for 2026, I'm less hopeful than 2025 has been. But for the longer term, I'm quite optimistic.
And that's probably the best we can hope for in the current circumstances. My thanks to Tom for taking the time to chat to us today, and to you for listening. Please don't forget to rate, review this podcast on Spotify, Apple Podcasts, or wherever you get your podcasts. And we look forward to you joining us again.
This podcast is sponsored by AXA Farm Insurance. AXA offers tailored cover to fit your unique needs, whether it's public liability or protection for your family home, outbuildings, or farm vehicles. Based in Athlone, the AXA Farm team of agri-specialists and regional managers work together to ensure you receive the seamless support you need. Switching to AXA is easy thanks to an innovative online service that enables you to quickly and easily find the best cover for your needs. For more information, head to axa.ie. AXA Insurance Stack is regulated by the Central Bank of Ireland.